Hello, John Walker's my name. I've been in the industry of financial planning for 34 years and 28 years I've specialised in age pension. I can tell you that hardly anybody is aware of the ramifications of the Centrelink Asset Test changes that will come to bear on all of us this January. The changes are legislated, they are not proposed. Now, there is general information in this presentation. It's not specific, so I would ask that you do not make any action on some of the ideas that we present without first talking to a professional who's qualified to talk to you about the issues outlined. As I said at the beginning, John Walker is my name. I've specialised in aged care and age pension planning for many years now. Our office at Circular Quay has the following goal, and that is that no Australian retiree should ever have to worry about their money. So the pension changes. There's always good news and bad news. The good news is that the lower pension thresholds will rise to enable people to enjoy the full pension with modest assets. On the other hand, exceed those thresholds, and this is where the bad news comes in, you lose $3 for every $1,000 rather than the current $1.50 per fortnight for every $1,000 in excess of the lower threshold. This will mean that importantly, not only a small number of pensioners will qualify now for the age pension, but over 300,000 pensioners will have their pensions reduced, or in 91,000 part pensioners will actually have their pensions taken away from them for good, possibly. Now let's see what these lower thresholds look like. You can see on the left hand side single homeowners, single non-homeowners, couple homeowners and couple non-homeowners. So it does depend on whether you're a single person, whether you're in a couple, whether you're homeowners or not. But in all the cases you can see that there is an increase of anywhere between $40,000 and $150,000 in the lower threshold. So single people who have assets up to $209,000 at this stage can have a full age pension. But come January 1, the more generous lower threshold has been lifted to $250,000. But what about the bad news? The $3 per fortnight lost off the age pension for every $1,000 in excess of that very generous lower threshold. Well, look what happens. Let's take the single homeowner as an example. The single homeowner, the current upper threshold is $793,750. But look, in the middle column, come January 1, that threshold drops to $542,500. This, you can see on the third column, could result in a single homeowner having their pension reduced by $9,715 per annum. And it's similar for the non-homer, single person, the couples, homeowner or non-homer. Look at the amount of money they will be losing. How is that money to be recovered or replaced? More specifically, let's look at a chart here, and if you're a single homeowner, you could glance down to see where you fit into this situation. Note that currently where a person has $291,000 in accessible assets, and that, by the way, is financial as well as non-financial. Non-financial could be your car, the Picasso painting on the wall, it could be when you glance across the column, the row I should say, you will see that the current pension is $19,607, and that will be retained. But very rapidly, as your assets increase after that, you'll see that by total assets of $542,500, all the pension, which currently would be $9,798 a year, is totally lost. For a couple, it's similar. If they had assets, financial and non-financial, of $453,500, their current part pension would be $28,259 per annum, and that will be retained. But very quickly, due to that $3 per thousand reduction, by $816,000 their pension is lost, where currently under the current rules they would be enjoying $14,122 of pension from Centrelink. What an amazing amount of dollars income which will be lost come January 17. Of course, we've only spoken about the assets test. It's important, and I'm sure most people currently on the age pension would realise that it's a battle between the asset test and the income test as applied by Centrelink to determine the amount of pension you will receive. Of course, the test that gives you the worst pension is the one that they will apply. Will you lose everything? Will you retain the pension card? Well, no, you won't, but the changes will allow for people who are over age pension to automatically gain the Commonwealth Seniors Healthcare Card, while those on pensions but under the age pension age will retain the healthcare card. In some cases, we've identified clients who will in fact also qualify for the low income healthcare card. For the veterans out there, if you're on a gold card, that will be retained. So just as a bit of a summary, how could this impact you? Well, it's pretty obvious that your pension entitlement will be reduced, your cash flow will be reduced, your living standards could well be reduced, and importantly, where will this income coming from? It's pretty obvious, isn't it? It's going to come from your retirement savings, which will be depleted much quicker over time, especially if you live a ripe old age. And that, secondly, by the way, most clients we have would love to leave a legacy to the kids or someone they care about. That objective around their estate planning could be severely impacted. There are several strategies that can be applied. If you're a member of a couple and the spouse is under the age pension, money can be contributed to their superannuation and not be asset tested. We've had clients, by the way, who have improved their home. There's been many a job they've put off for some time now, whether it's a new kitchen or bathroom or tiling or painting. That money, even though it's improving the value of your home, fortuitously at this point in time the home is an exempt asset and therefore has no impact on the asset test. Prepaid funeral expenses and funeral bonds. This is an area that will obviously need attention at some point in time in the future. You could bring forward that potential future expense to today. The money invested in these areas within limits from Centrelink's point of view again is a non-asset. Gifting to people you care about. There is a limit of up to $30,000 in a 5-year period. By the way, in any tax year, the limit is $10,000. If one gives more than that, it's seen by our friends at Centrelink as a deprived asset and will be retained under the asset test for up to 5 years. More complicated techniques would be to use wills where beneficiaries other than one spouse could receive some estate funds earlier than anticipated. Defined benefit income streams are generally not asset tested but certainly income tested. If one was to be going into an aged care facility, the lump sum accommodation payments are not assessed for Centrelink purposes. and in some cases those people currently on the pension bonus scheme could in fact bring forward their application for the age pension before January 17. So what's your next steps? As I said at the beginning, everybody's situation, circumstances are different. That's why I'd like to offer you a complimentary consultation. We will look at how these changes will impact on you specifically, and we'll suggest some of the strategies that might work for you that could result in you saving thousands of dollars per year now and on into the future. We can only offer a limited amount of consultations per month, time permitting, and of course our standards of service are high, so we will not be rushing any suggestions that we might make. And of course, if you don't want to work with us in the future, there's no obligation. That's up to you. So for that free consultation, please give us a ring on 92413733, and we'll book you in. If you're a Sydney sider, if you're out of town, then please still give us a ring and we'll see what we can do over the phone for you. Again, I can't help but repeat that this has been general information out there, and we would ask that you make no changes to your circumstances without consulting a professional who's qualified to advise in these areas of the age pension. Thanks very much for listening. I hope it's been of help, and as I said, feel free to give us a call for that complimentary consultation, and best wishes.